Welcome to our final presentation for taxes, everybody's favorite subject to hate. And in this presentation, we'll discuss some odds and ends, some sources of information, tax-related software, and tax strategies. So let's get started on slide 33. The IRS has several methods of assistance. The IRS.gov website is actually not that bad, folks. People love to complain about it. It could be better, yeah, okay, but it could be a whole lot worse. They used to have an email service that I loved. You send them an email, they get back to you, but they don't do that anymore. I don't know why. Probably because people would ask specific questions about their individual taxes. I was just asking questions about taxes itself. How do you do this? How do you do that? But that's gone. And there's limited phone service now. So I guess the best thing to do is write them a letter or make an appointment. A book that's been around forever is J.K. Lasser's Your Income Tax, which actually is this pretty decent book. And you can always find last year's book for pennies because it's out of date. But most of the stuff is not going to change. So we have Accounting 109, dear students, which will teach you how to do taxes much more detailed than what we did here. This was an overview of the typical tax return for a homeowner, but they're going to go into more detail. And remember the VITA internship, VITA, whatever you say it, volunteer income tax assistant. You get college credit. It's very cool. And I had a lot of fun. I did it one year when I was on sabbatical and had a lot of fun. And as we say in the assignment, the internet is riddled with thousands of tax-related websites. Many are way out of date, and many are just plain wrong. And some of them are going to try to convince you that you don't have to pay your taxes. And we know where that can lead you, dear students. I hear they allow you to do your time on the weekends and work during the week to pay them off. Anyway, yeah, just be careful. And that's why we ask you to use the IRS website to do the assignment. Although some of you are probably just going to use, your favorite search engine. It was celebrated case where the IRS website was wrong. They gave wrong information, and a couple followed the information and got audited and told they were wrong. And they said, but wait a minute, you use this example on your own website. How could you penalize us for doing what you told us to do? And the couple took the IRS to court, and they lost. The judge said, sorry, Yeah, great. So that's why. Oh my goodness, the IRS has a bad reputation. They're humans too. They make mistakes, and in some cases, if they make a mistake, you're the one who gets dumped on. What about tax preparation software? For many years, folks, I used spreadsheets, and I still use spreadsheets to do my taxes. But after, I don't know, I forget what year it was, they gave us a free copy. This was like 2001 or something like that. And they just distributed them out. It was the last couple days before the taxes were due, and they came to campus and just gave us a bunch of free copies. So I loaded it up and ran it, and it turned out that I was doing things at least the way TurboTax said that it should be done. And so I've been using it ever since. There are many others: H&R Block at Home, Tax Act, Tax Slayer, I don't know, free tax returns. So check them out. The now the companies want you to use your browser. TurboTax you can download or buy the CD at. I usually get it at Costco. And they would rather you use the internet one. Why is that? Because they charge more for it. I like the federal deluxe with one state, and it's usually the most cost-effective way of doing it. But hey, I've seen other people use other ones, so check it out. Okay. How about services? Well, now tax preparers, folks, of which you could become with a little bit of experience. Some of them don't know very much at all. They just use the software. The high-powered individuals are enrolled agents, accountants, CPAs, and tax attorneys. Of the three, I would be most inclined to use an enrolled agent. These are people who typically worked at the IRS for many years, and the IRS puts them through a severe course of study and exam to become an enrolled agent. Because the CPAs, a lot of them are like tax preparers. They know certain things, and then they just put everything into the program that they have. It's like TurboTax, and bingo. But if you ask them specific questions, they might go, "Oh, I'll get back to you on that." Where the enrolled agents, they have to know it. And then, of course, if you really need a tax attorney, then you're really going to be spending some big bucks. Oh, by the way, all three are very expensive. We talked about the VITA program, the Volunteer Income Tax Assistance here at Southwestern. Notice that if your tax preparer, oh, by the way, if you don't want to get involved in VITA, you can just go to VITA and they'll do your taxes for you if you qualify. I think I forget, if you make under 70,000 or something like that, they'll do it. And as I said, it's a lot of fun. If your tax preparer makes a mistake, oops, you're still responsible, plus any interest and penalties. For this reason, it is important to at least understand the forms you're signing and check that the numbers are reasonable. See, a lot of bogus individuals would say, "How much did you pay in taxes last year?" "Well, I paid $5,000. "How would you like to pay $500? "Oh, that's great. I'd be really happy to do that. So I'll do your taxes for you." And then they just lie. They just make bogus deductions or hide some of the income or whatever, and then say, "Here, sign this." But wait a minute, this doesn't make. No, just sign it. Just sign it. And of course, you're the one who signed it. The tax preparer didn't sign it. Now the IRS has created this registration and testing process for tax preparers, and you're supposed to have gone through that. And that's where VITA comes in. So you'll be one of those people who are certified. Now, I think VITA, you can't ask for money if you get certified through VITA. You have to do another test to actually ask for money. You're a volunteer, so you're unpaid. But it's the same exam, basically. Slide number 36. How about audits? Everybody's worried about audits, but really, relax. Many are just because of arithmetic errors. I told you about this. Maybe, yeah, I did tell you one time somebody just gave the IRS the wrong information. And so they asked me, said, "Hey, what's going on here?" So I said, "Wait a minute, this isn't right." I went to those individuals. They said, "Oops, sorry." So they reissued the document. I made a copy. I sent the IRS. They sent the IRS. The IRS sent me a letter saying, "Oh, thank you very much." If you claim large or unusual deductions, you are more likely to be audited. If you use the earned income credit, which is for people at the lower end of the economic scale with children, you're likely to be audited. That doesn't make any sense to me. There are three types of audits. A correspondence audit, which is where they send you a letter saying, "Hey, something's not right, fix it," or "Send us this receipt," or "Hey, these people said you made this much, you said you made this much, what's going on?" There's the office audit where they ask you to come in and they say, "Bring this, that, and the other thing," and you bring this, that, and the other thing, and you say, "Good morning, here you are, goodbye." And then the field audit, which is the most complex. You want to avoid this type at all costs. Now, there are some people who are just randomly chosen. I feel sorry for those people because the IRS will come and just ask you everything. But most of the people who are given a field audit are given that audit because the IRS smells smoke and they think there's fire somewhere. If you are chosen to do a field audit, that's when you need an enrolled agent. That's when I would call. If I got a field audit, I would hand everything over to the enrolled agent and say, "Here, you deal with the IRS." And they go to the field agent. They go to the enrolled agent's office. You do not want to deal with these people. Why? Because if you think you can finesse them, they've seen it all, right? This is their job. So yeah. If you've done anything hinky, you've done anything awkward, you should come clean, right? Because I think they let you go to jail on the weekend so you can work on the week to make your money back. Look, they can't just show up at your door and knock on your door and say, "Hey." They have to give you plenty of time to prepare, and that's when you need the high-powered individual like an enrolled agent. So remember, correspondence audit is the easiest, office audit is in between, and then the field audit is the most complex. So you want a professional representing you if you're in a field audit. Unless, of course, you're one of the people who are randomly chosen. All you have is a W-2, and I don't even know why they do that. They just do that to see, if things are working right. But that's very rare. It's not likely you're going to get hit with those. There are two time-tested tax planning strategies: tax evasion and tax avoidance. And this number is actually quite old. It's probably a lot more now because of inflation. But Americans avoid about $150 billion in taxes annually by hiding money offshore. One of them was a person who was running for president several years ago. Tax avoidance is perfectly legitimate. I met up with one person who was afraid to do the deduction. No, don't be afraid to do it if it's a legitimate deduction. And if it's somewhere gray in between, you can talk to them and they'll say, yeah, okay, we'll take it or no. Then all you got to do is file 1040X and pay them, the interest. If it wasn't legitimate, then go talk to an enrolled agent. But please, folks, don't evade taxes. It's you don't want to deal with the IRS. They can make your life miserable. And I've talked with an ex-IRS agent who said, that we're not really as powerful as people think we are. But if you've deliberately evaded taxes, oh yeah, we can come down on you pretty darn hard. And that's where, that's where a lot of the people who are crooks, they don't get hit with the crime, they get hit with avoiding paying taxes on the crime. And that's what happened to Al Capone. So slide 38. So let's start with some tax planning strategies. Well, as lucky members of the great American economic machine, you have several options for deferring taxes. Tax deferred annuities, no. We'll talk about annuities, folks. Unless you've got so much money you don't know what to do with it, annuities are usually a bad idea. Retirement plans are better for the vast majority of us. Annuities have huge fees, terrible restrictions, but if you get in the industry, their commissions are really, really generous. We'll see that later on. Treasury bonds, yawn. If you use your savings bonds for college education, you don't pay interest on them. Now, deferred, tax qualified retirement plans. Now we're talking, right? 401ks, 403bs, what silly names. It comes from the IRS code 403b, 401k, where it describes if you work for this company and they put money away on your behalf and you put money away and you keep it in this account, you don't pay taxes on it until you retire. Very cool. Traditional Roth IRA, the Roth is better. Educational IRA, 529 plan, the Roth is better. We'll discuss these in detail later on. The KEO, the SEP, the simple IRA for people who are self-employed. Yeah, we'll discuss these. And these are the choice for retirement planning for the vast majority of us. Now, if you invest outside retirement plans in what are called regular accounts or taxable accounts, capital gains are going to be taxed at a lower rate than income. And we made a mention to that in the previous presentation. Folks who are making millions, billions of dollars are using enrolled agents and tax attorneys to turn their earned income into capital gains so they pay less. And a few of the billionaires have spoken out about it, most notably Warren Buffett, who said, this doesn't make any sense. I shouldn't have a lower tax rate than my secretary. And of course, the other billionaires say, well, you could pay more if you want. Like Elon Musk and Jeff Bezos and Zuckerberg, who, there comes a time when you just say, look, how much more money do I need? How many more mansions can I buy? How many more jets can I own? But that's our life. That's our human nature here. Slide number 39. Now, here it is, folks. Owning a home is, and in some cases was, one of the best tax shelters because you could deduct the loan interest and property taxes when you itemize. This reduces your taxable income, as we saw in the previous chapter. But fewer people, because of the 2017 tax cuts, can now take advantage of this strategy. Again, it's all going to go back to what it was before that in 2026, so we'll see what happens. Home equity lines of credits, oh, that was eliminated by the 2017 tax bill, but it's going to come back in 2026. Use tax-exempt investments such as municipal bonds. Well, we're going to see that muni bonds, by their very nature, are tax advantaged, but that tax advantage is much stronger for people who are making a lot of money. So muni bonds are really not that popular with the general population, although some people like them because they are fairly safe and they pay a decent rate of interest. And then starting a business is one of the best tax planning strategies, but it has to be a business, not a hobby. You have to start making money. If I have a cute story where my niece and her friend started a theater production company, and they were doing pretty darn good. Actually, they were actually making money with very bare bones productions. And then, of course, the industry, the critics say, well, we need to see more professional productions from this company. And so they started spending more money to do their productions, and they started losing money. Theater folks, don't go into the theater business. And so after a few years, I said, niece, you gotta, if the business, you can't keep losing money forever. The IRS is going to declare it it's a hobby, and they're going to come after you. Because some people will, I make doll houses, and I've lost a lot of money making doll houses, but I get to write off all the stuff I buy. No. After a few years, if you're not making money, they're going to say, forget it. So it took me a while to contact somebody at the IRS that understood what I was asking, and I eventually got to somebody and talked with them. And I said, doing this for my niece and her friend, and they've been losing money now. They started making money, but they lost. They've been losing money now, and it doesn't look like they're going to make any money for the coming years. He said, well, what kind of business is it? I said, it's a theater production company. And he roared with laughter. He said, you go right ahead and keep losing as much money as you want. Because obviously theaters, the tickets, we complain about how much the tickets are for concerts and for theaters, but the tickets don't even go anywhere near to pay for the amount that it costs to put on these, professional productions. So start a business. So now let's take a look at the home deduction, because has been and still is, except for some people, the primary way to reduce your taxes. So here's a single person making $60,000 of adjusted gross income. So that's after they've taken any adjustments. They've made IRA deductions or paid student loan interest. And a married couple. So the standard deduction in 2023 was $13,850 and $27,700 for the married couple. So the taxable income for the single person is $46,150. There should be a minus sign there to tell you, deduction. To deduct, and $32,300 for the married couple. So that with no home deduction, and they can't take advantage of the $100 they gave to Father Joe's Village, $5,466 in taxes. Less than $400, less than $500 a month. Whereas the married couple is paying less than $300 a month, $30,439. So let's see what happens if we buy a home at the lower end of the home buying process. Here we go. The state income tax, $1,000. Real estate property taxes, $4,850. DMV property tax, $200. Mortgage interest, $20,250. Gifts to charity. This is a Kingbacks Schedule A. So $27,000 in itemized deductions. So this is from the previous presentation. So the single person reduces their taxable income, their gross income, by $27,000 and gets a taxable income of $33,000. The married couple, again, $60,000 minus $27,000. So now their taxable income for both these individuals, or the single person and the married couple, is $33,000. So the taxes for the single person have gone down about $200 a month. Well, nothing to sneeze at. But remember that the standard deduction for the married couple was $27,700, or was it $800? No, it was $700. their taxes would be more with the itemized deductions. It would make more sense for them to do the standard deduction. And of course, if they use one of the programs, the program would, like TurboTax, Tax Accuracy, would say, hey, you're better off using the standard deduction. So the married couple would pay more taxes if they itemized. And the tax savings for the, well, not quite, what is that, like $150 a month. For married couples buying at the lower end of the housing market, the Republican tax cuts remove the tax savings. You're better off taking the standard deduction. And the tax savings for the single buyers is unimpressive. So don't expect the real estate agents to tell you the truth about this new reality. They're going to be jumping up and down screaming, you're going to save so much taxes. You're going to save so much taxes. Well, maybe at the lower end, buying a condo for $400,000 or $500,000, probably not. Now, what happens when your income gets a little higher? How about 90 grand of adjusted gross income? This is after any, paying a student loan interest or whatever. So the standard deduction for the single person is $13,850, same, and for the married couple, $27,700. So now look at their taxable income is pretty high, $76,150 for the single person and $62,300 for the married couple. So here, the single person is paying $1,000 a month in taxes, and we're not even talking about state taxes; these are federal taxes. The married couple is paying about a little under $600 a month for their taxes. So why don't we buy a house a little higher, maybe $800,000, $200,000, $900,000. State income tax, property tax, DMV tax. Remember, these three taxes are limited to $10,000. So their property tax might have been more, but they don't get to take advantage of that. So notice that these three add up to $10,000. Now, the mortgage interest, again, might be limited. I think it's over $1 million or whatever. But they're paying $37,800, about a little over $3,000 a month in mortgage interest. This is very typical for California, the East Coast cities, Chicago, and other areas where the housing is expensive. And so not only is this limited to $10,000, and of course it's the same for single or married people, there are also the mortgage interest might be limited. Not in this case, it's not too much, and it gives to charity. So these people have $49,000. Here, the new tax cuts limit the amount of state and local taxes deductions to $10,000 and the amount of mortgage interest from the first $750,000 of new mortgages. So let's say this is an older mortgage, whatever. But so $49,000. So now the single person has gone from $90,000 down to $41,000 of taxable income. Married couple, same. Notice the big drop for the single person. $4,700 versus $12,000, and then $4,483 versus what was it, $7,000 or so? I forget exactly. It was a little over $7,000, right? Yeah, $7,000. So it turns out that once your income reaches the middle to upper middle class, a home is normally a very good tax shelter. However, be mindful of the limits imposed by the new Republican tax cuts. The Republicans, they didn't make any bones about it. They wanted to punish the high tax states for not voting Republican. Well, people get angry when you hit them in the pocketbook. And in 2018, the voters in high tax states proceeded to decimate what few Republicans were left. And Orange County, which is a bastion of Republicanism for decades, lost all of its Republican House representatives in 2018. Now, I think three of them, it was six, right? Three of them have come back for something like that. But still, you hit people in the pocketbook, they get very angry. And that's why politicians are always so happy to talk about tax cuts. Don't worry about the deficit. Oh, tax cuts! Yeah. Now, we're almost done. Oh, by the way, tax cuts and tax savings and tax income. Are we going to pay higher taxes in the future? Oh, yeah, we're going to have to. Why? Because we have a huge debt that we're going to pay back. Now, some people are saying, oh, we'll never pay it back. Yes, we will. We have to. We have no choice. Other people who are not very smart but very cruel and angry and want to be president say, oh, we're going to default in the debt. That's like talking about, we're going to have a nuclear war. Just don't even think about it. Don't even think about it. We're going to have to pay off the debt. It's not going to be fun. We're going to have to pay higher taxes. To think about defaulting on the debt, it would just bring down the global economy, and it's like having a nuclear war. Okay, enough of that. Slide 48. Remember, you can always go back and listen to it, pause the presentations. Remember that $299 stereo? Oh my goodness, how long ago was that? That cost us $509.74? Well, if it's a legitimate business expense, then that same $299 stereo costs us just $314.15. You still have to pay the state sales tax, but you get to deduct the sales tax also as a business expense. If you plan to resell it, then you don't pay sales tax and you don't pay taxes on the amount because you turn around and sell it to somebody else. But you also get to deduct the state sales tax as a business expense. Now, so you don't pay, you get to deduct the cost of the stereo as a business expense. That's Schedule C. You got your own business, or maybe you're a corporation and it's a whole other world. But when would a stereo be a legitimate business expense? Well, if you're a DJ, obviously, or you're a musician, or maybe you have a storefront or an office, a dentist's office or doctor's office, where you want to put the stereo in there for the clients coming in. So think about it. Again, it has to be a real business. You have to eventually start making money. If you just keep losing money every year, they're going to come after you, unless you're a theater production company. So, donate your car, get a tax break. Well, an all too familiar spiel we hear from charities these days is you can donate your car and get a $2,500 tax break. Well, in 22% tax bracket, that's worth $550 in fewer taxes. Of course, you might only get $50 in cash if you ask the recycling yard to come and get it. Not a bad deal, eh? Well, no more, right? No. The charity must sell the car immediately and tell you the amount that they received for the car. And again, if it's in really bad shape, they might only get $100. If you don't itemize also, instead take the standard deduction, then you don't get to take this itemized deduction anyway. And so many people have been burnt by this tactic. They've donated it to Jewish Family Services or KPBS or Southwestern Community College or Father Joe's. I keep using Father Joe's. And they give them a little receipt saying, you gave us a car that was worth $250. They go to the tax preparer and say, hey, I got this deduction. And the tax preparer says, well, do you have any other deductions? Do you own a home? Do you have any medical expenses? Oh, no. Well, sorry, you don't get to take advantage of it because the standard deduction of whatever it was, I forget, $13,850 was a whole lot more than the $250 you got for the deduction for the car. Make sure you understand that. Go back to the second presentation and go through that over and over again until that sinks in. Because once it does, it's pretty straightforward. But until then, people get very, very confused. So what's the bottom line? Drum roll, please. Remember good old Benjamin Franklin, potbelly stove, bifocals, death and taxes. Well, you know what? Really, he should have said there's nothing certain in life except for death, taxes, and tax law changes. So quit complaining or keep complaining. Pay your taxes. And if we want real tax reform, all we really have to do is require the senators and representatives in Congress to do their own tax returns. You see, every year, the General Accounting Office sends people up onto Capitol Hill and they do the taxes for the senators and the Congress people. That's not right. They should be required to do their own taxes, and then we would see the tax simplification. But don't hold your breath. Instead, become a CPA or a tax preparer or maybe an enrolled agent, but that you usually have to work for the IRS first. You will be guaranteed lifetime employment. So the first step is volunteer with the VITA program next year at Southwestern Community College. Oh my goodness. Yes, everyone's favorite topic to hate. So go back over this, do the first tax exercise, make sure it makes sense. Do the second tax exercise. Remember, there's an answer key. And I was thinking, I think I'll do it in a commentary. I'll go through it and maybe do a video or a commentary. I haven't worked on that yet. I'll work on that. But thank you so much for being in our class, dear students. All of us are honored, proud, grateful, and feel privileged that you're with us. We want you to be awesome. We want this to be the best class you've ever taken. And I shouldn't really say that after subjecting you to all this tax preparation stuff, should I? Sorry. See you in our next presentation, dear students.